Hi everyone, good Tuesday afternoon and welcome to GoLocal Live. I'm GoLocal News Editor Kate Nagel. Thanks for tuning in for the 4 o'clock news and politics show. We'd like to welcome a familiar face, John Kuczmarski with Efficient Capital Strategies. Thanks for joining us today.
Thanks for having me, Kate.
Always ready, willing, and able to come and give us the latest with the stock market and what's in the news this week. Of course, all eyes on the Federal Reserve tomorrow and what they're going to do. So let's start with the Fed.
Yes, tomorrow we have a meeting. We have a press conference. It's a very there's a lot of uncertainty going into tomorrow. There's a lot of speculation that the Fed may announce their end to their balance sheet reduction plan. The market's kind of pricing that in, and they'll give some clarity onto what made them pivot policy in early January. We were in a cycle of tightening. We had 10 rate hikes. We had the balance sheet rolling off around 50 basis points a month. Obviously, when we were here in the fourth quarter, markets went into turmoil. Things are a little happier now, but we'll see what's going to happen with the Fed tomorrow. A lot of people have made the argument that Jay Powell's kind of boxed himself a little bit into a corner by pivoting policy and maybe delaying tightening. So we'll see what's going to happen tomorrow. It's there's a lot of uncertainty going into it. So I'll know a lot more tomorrow. I actually we'll see. I actually prefer that the Fed would punt tomorrow on the balance sheet normalization plan. It would give them a little more flexibility because markets have come back in a way that I don't think they anticipated. When I was here in October, I was fairly confident that the economy would not drop out, and it hasn't. We could get into a situation where the Fed really regrets making this pivot if we start overheating again. But right now, last inflation print was 1.5%. That gives the Fed some leeway to slow down on the tightening, but things can change very quickly.
What if that happened? You talked about it heating up. Folks, including Goldman, said this week Fed may let inflation run a little hotter. What would be that impact if that happens?
Absolutely. And in 1978, the Fed came up with a 2% inflation target. Okay, and over the last 10 years, we've been a little bit under. Okay. So what you're referring to is the Fed is actually going to tolerate a higher level of inflation. They're not going to raise the target, but they've announced that they're willing to tolerate maybe 2 to 3% inflation in the short term as a catch-up, using their words.
So if that is a catch-up, what does that mean? Stock market aside, what does that look like for the U.S. in 2019?
Yeah, we started 2019 on a very awkward start, a lot of uncertainty. The economy actually has not improved that much since December, but the market's kind of gotten ahead of itself, maybe reading the Federal Reserve tea leaves. But the bond market is almost in a different world than the stock market now. It's pricing more of the negative side of what's going on with economic data. We're going to see GDP, shutdown related around 0.4%. We're going to see that around the world. We are seeing some economic data in China soften. There are some bright spots. U.S. service economy, ISM, it's around 60. So, it's not all bad.
Okay. Let's pivot then to China with the collapse of the trade deal. And also, let's talk a little bit about the battle for 5G.
Yes, and this is really what's going on behind the scenes in the China deal. Today, we had a headline come out from the U.S. trade rep that they're further apart on intellectual property. The battle for 5G and Huawei is a hot button issue. The U.S. is arguing that, I don't know if the validity of it, there's probably some truth to it and some fallacy.
And put it in a little bit of layman's terms for folks.
Layman's term, 5G is the next generation of technology. Huawei is, kind of ahead of the game. There are some national security concerns of the U.S. government about having these servers and phones on networks. Some of it's probably justified. Some of it's a little maybe anti-competition. But that is the main crux of what's going on in the China trade deal. They're negotiating over intellectual property and protecting it. And, it's surprising. The market, hasn't had this trade deal that everyone was anticipating, and the market just kind of doesn't care.
You're surprised the market doesn't care?
I'm not surprised, because I was in the industry like in the early part of this decade where economic growth was 1.5% and the market was going up 15% a year. So, just because the macro picture doesn't align with what's going on, markets tend to be forward leading. But also, we got to be careful. I think markets may have gotten ahead of ourselves, but to be honest, I think probably the most likely route for markets are probably higher for the rest of the decade.
And let's talk a little bit about 2019 as well. I know last time you were in, it was a tough time. Actually, we were talking, it wasn't actually when it was at the bottom before it had that rebound. But as we had spoken about before, it was a little bit of a scare, and the over-leveraged investors kind of had panic sells. The Fed caved, and now it's pivoted. And a lot of people are thinking, are we going to see more bad news? You think it's going to keep going up?
Well, let's talk about 2000 and the fourth quarter of 2018. We saw an environment where, we talked about the leverage investor having to sell at almost any cost to survive. We really saw the market, for several reasons, really fall out in a way that was a little bit exacerbated to the downside. And I think we're actually, for those same reasons, we're actually seeing the market be exacerbated to the upside. But look, the worst part that really just breaks my heart is that U.S. retail investors pulled $65 billion in October, $65 billion in November, and $180 billion in December. That's $300 billion they pulled out of the market in when the market was under duress. Markets have recovered substantially, and in January they put $20 billion back in. So that's like 8% of what came out. So one of the when I was here, I try to just tell investors to worry about the long term, worry about what you're investing for, and don't do anything in a panic. It's generally not a good idea, just not.
Work with your investment advisor, make sure they have the lay of the land. It'll be interesting to see what happens with the Federal Reserve tomorrow. China moving forward as well. Any last things you want folks to keep an eye on until the next time we see you?
Yeah, I mean, look, I think the U.S. market is probably in good shape. The biggest risk would be if inflation picks up, because I really think what's happening now is that the Fed is making a policy mistake. I wish they didn't do it. I wish they would have waited a little bit before putting up the white flag. The reason why is because if the economy starts to overheat and they have to do another 4 to 6 rate hikes to really cool things off, it's going to have a tremendous impact on the U.S. housing market, the U.S. mortgage market, and the U.S. corporate bond market. So they really are playing with fire, and we saw this in the 60s where the Fed, created this policy called New Economics in 1962, and in 1965 we saw, in full employment like we are today, low inflation, and the Fed just didn't step off the gas. Whether they didn't have the courage to or not, they didn't do it. And we saw, what was known as the Great Inflation of the 70s, which is kind of a lost decade. And it took, the U.S. inflation rate was from 1965 to 1985 was above 2%. So topping at 12%. I don't think we're there, but I think the Fed needs to be concerned about overstimulating the economy and what it could have for future inflation and the possibility of having not a hyperinflation scenario, but a runaway inflation scenario, which would cause the Fed to have to tighten aggressively. And that would be, most of their tools are easy money tools, easy policy tools. And if we get into a point where inflation gets away, those tools will actually have the opposite effect of what they would want.
Well, we're going to keep a close eye on the Federal Reserve tomorrow, and hopefully we'll have the opportunity to have John Kuczmarski with Efficient Capital Strategies back in sometime soon. Okay.
Thank you for having me.
Don't go anywhere. We're going to go from the stock market to politics here on GoLocal Live. We'll be right back.